Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The hot war tensions in the Middle East from Israel's attack on Iran has generated substantial market reaction. And a hot war between Israel and Iran could go on for a very long time. The first 3 days may be only the start. The gold price has jumped, the oil price has soared. Equity prices are falling, although the futures market suggests Wall Street may open tomorrow unchanged. Bond yields are up after an earlier risk-aversion fall. The US dollar has been falling but is now in a wavering phase. Coming up this shortened week locally are the first look at May inflation with the selected price indexes, and on Thursday the first quarter GDP result. Expect a 0.7% expansion from the fourth quarter of 2024, and there'll be a full dairy auction on Wednesday. Geopolitical tensions in the Middle East will remain in focus this week following Israel's strike on Iran's nuclear facilities, heightening fears of a broader regional conflict. Markets will also be closely watching any progress on trade negotiations between the US and its key partners. Meanwhile, attention shifts to the G7 summit in Canada, where leaders of the world's largest economies will meet to discuss major political challenges. But one thing not on the formal agenda is the US trade war with their allies. Of course, it will be a hot topic in non-official discussions. Of special interest will be the meeting between Australia's Albanese and President Trump. It's also a busy week for monetary policy. The US Federal Reserve, the People's Bank of China, the Bank of Japan and the Bank of England are all expected to keep rates unchanged. Decisions are also due from central banks in Switzerland, Sweden, Norway, Turkey, Brazil, Indonesia, the Philippines and Taiwan. On the data front, we get China's industrial production and retail sales and Japan's trade data. Australia's May labour market data will be updated on Thursday, so a lot to absorb this week, irrespective of the uncertainty swirling over the hot wars. But first in China, their banks extended 620 billion yuan in new loans in May, up from 280 billion in April. But that was the lowest level for that month since 2005. Despite the monthly rebound, the May new loan figure was way less than the expected 850 billion yuan, and even lower than the 950 billion for May 2024. Low interest rates are not encouraging lending there. The average rate in May was little changed at 1.55%. And Japanese industrial production also fell in April from March, down 1.1%, but remained 0.5% higher than a year ago. Malaysian retail sales were up 4.7% in April from a year ago, but as good as that sounds, it's their weakest year-on-year rise since May 2023. And these gains are before inflation, which is running in Malaysia at only 1.4%. In the US was news American consumer sentiment improved in early June from May in the widely watched University of Michigan survey, which was taken between the 2nd and 7th of June. Although this is the first improvement in the past 6 months, it is off a record low and is still 11% lower than year-ago levels. This survey predates the current crises, and it predates the widespread series of well-attended protest rallies in the US, even in the face of an assassination of one Democratic lawmaker and an attempted assassination of another. Given the Proud Boys telegram chatter, this isn't so surprising. On the US West Coast, container traffic at the large Los Angeles shipping terminal fell in May. Import traffic was down 19% from April, down 9% from a year ago. Export loadings were down 5% from a year ago. North of the border, and perhaps somewhat surprisingly, Canadian vehicle purchases rose in April to 196,000, the highest level since June 2019. Perhaps this is boosted by buyers wanting to avoid tariff-related price hikes. The jump was countrywide and was 11% above the year-ago level. Meanwhile, Canadian manufacturing sales fell 2.8% in April, with the tariff impact starting to be felt. It was down 2.7% from a year ago. Recession risks are rising in Canada. And EU industrial production sagged in April from March after a strong March gain, but managed to stay marginally higher than year-ago levels. The EU publishes this data on a volume basis, so this is a real gain. And finally, we should probably note that the price of lithium carbonate has now crashed 90% from its giddy height in 2022. It is now back to late 2020 levels before the frenzy. The US Treasury 10-year yield is now at 4.41% and unchanged from Saturday. And the price of gold will start today at $3,430 an ounce, down $3 from Saturday, but up $115 from a week ago. In contrast, the silver price at $36.17 an ounce is little change from a week ago. And American oil prices are holding higher, although down 50 cents from Saturday, at just on $73 a barrel, while the international Brent price is now just under $74.50 a barrel. These are large jumps from a week ago on the war risks, and the full assessment of supply risks are not yet understood, so this price could be volatile this week. And the Kiwi dollar is now at 60.2 US cents, down 10 basis points from Saturday. Against the Aussie, we're unchanged at 92.7 Australian cents. Against the euro, we're down 10 basis points at 52.1 euro cents. That all means our trade-weighted index starts today at just over 67.9 and down 20 basis points from Saturday, shifted a bit by a fall against the British pound. And the Bitcoin price starts today at $105,794 and up 0.6% from Saturday. Volatility over the past 24 hours has been low at just on plus or minus 0.8%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.